All right, thank you very much.
Brilliant, brilliant. Good afternoon, everybody. I've just been given a very stern talking to not run over, so we're going to be very, very prompt today. I was glad that you could see a picture of me when I was fit and tanned, and now you get the catfish version today. Thank you for taking the time, first of all, to sit here and listen to me. I'm going to help you understand why decentralized trading is the next 50, 100x opportunity that most of you are missing out on, and you don't even know why, okay? So first of all, an introduction to me, personally. So my name's Winn. I'm founder and CEO of FoxiFy. We launch in June. We're just about to kick off our beta in a few weeks. My background, I've been in the Web3 space for about 15 months, which in DeFi terms is like 20 years. Before that, I've worked over 10 years in the corporate environment, worked for a couple of Fortune 500s, worked in very progressive industries like energy and sustainability and additive manufacturing, and then later on in the startup space. And I dedicated my life to doing this. I launched my first project a year ago, a week before Terra Luna, which was called Make DeFi Better. And actually, we did very well. Actually, it sounds like a very sad story, but we 8x during the bear market. And we love solving problems within this space, and there's no shortage of those. Oh. Sorry, I wasn't given a training course on this, so learning on the job. So just to give you the background, really, why are we all so emotional about Bitcoin? Where does that come from, right? And it's that word decentralization. And what does that mean? Decentralization really means putting the power back in our hands. And if we remember when Bitcoin really took off, it's back around 2008, 2009. And we're going through a little bit of one of those processes again at the moment on a global scale. And that's because we're angry. We're angry with the financial system, and so we want to take that power back, and that's what really drives the emotion into Bitcoin. Fast forward 12, 13 years, the industry is flourishing, and you get this rush of centralization, and then we saw how that played out in 2022. So you start off with decentralization, which we're very passionate about, and then centralization drives a lot of success. Ultimately then, failures that we saw last year like FTX, Celsius, and so on, have then sucked the confidence out of the industry, and it's been a very, very difficult year, obviously, within crypto. But there has been some winners, actually, over the last year, and that's the re-emergence of decentralization. And no more in any part of the industry than decentralized trading. Now, anybody here doesn't understand the difference between a centralized trading platform and a decentralized trading platform, I'll give you the TLDR. A centralized trading platform, as soon as you put your money on that platform, it's not yours. It's gone, right? It's numbers on a screen, and it's somebody else's funds now. You've heard the term, not your keys, not your crypto, and ultimately that is the decision that you take when you hand over funds to a centralized platform. Where decentralized platforms are fundamentally different, and within trading, typically the way they work is that they have a decentralized liquidity pool, which people provide liquidity to, and that effectively then becomes the house money that is used for leverage, for traders that are trading things like perpetual to borrow from on their positions when they're trading, okay? So the difference, the big fundamental difference being that when you use a decentralized trading platform, it removes the number one concern of any trader, which is, I can spend 30 years learning to be the best trader that's ever existed, but if I'm going to lose everything in my sleep, then what's the point? And that's really driven the successes that you've seen over the last year in decentralized trading. Some of the brands that you see here, so if we led by the likes of GMX and DYDX, they're doing significant volumes. We're seeing some of these guys earn as much as $1 million, sometimes even $2 million a day in fees, right? So these are substantial organizations with TVLs far in excess of 400 or 500 million. So you'd be forgiven for thinking, well, the opportunity's gone. What is this guy talking about? But that's not really the case, because actually we've only really scratched the surface. And let me explain the reason why we've only scratched the surface. If you survey traders in volumes, right? If you survey very big traders, fees are really important to them. But if you survey high numbers of traders and ask them what's most important to them, number one is the solvency of the platform they're using. That's number one concern. Number two, surprisingly, is actually user experience, right? So how easy is it for me to use? Because if it's my day job, I want my day job to be comfortable and I want it to be very practical to use. And then a very close third comes in with fees. Now, the reason you've seen this huge uptick in decentralized trading, I've already explained. But then there's also a reason why you see a huge gap between these two worlds still, despite it being a significant opportunity. And that's because most of these big players, even the ones that are making $1 million, $2 million a day in fees, is that they've solved problem number one and they've made problem number two even bigger, actually. Most of us here will have MetaMask wallets and we've long forgotten all of the stresses when you first got into DeFi. But if you can think back that far, it's really difficult. Yeah, it's really difficult. You land on a decentralized platform. You have to, in a very short space of time, if you want to trade, get your head around wallets, bridging, gas, which chain do I use? It is really, really difficult for people to translate, to transition from CeFi across to DeFi. And that's why, despite the successes that we've seen in decentralized trading, you still left with this huge gap between the two. Depending on where you get the numbers, there's always different sources, but typically we're seeing within perpetuals alone, the daily volume on perpetuals on centralized platforms is 50 times that of what you see on decentralized platforms, okay? And that doesn't account for the amount of people that just don't want to come into the industry because they don't trust the central exchanges and they can't get their head around the decentralized exchanges. So we can measure what we've got today and run the numbers, and we can see there's clearly a 50x opportunity if you can nail decentralized trading. What you can't measure is how many people don't even want to touch it because they don't trust the platforms within the space. And ultimately, decentralized trading with a world-class user experience will solve problem number one, and it will solve problem number two, and then we can start to really unlock the opportunity within this industry. But it's way bigger than this industry. I've worked in additive manufacturing. As I mentioned, I ran Schneider Electric's a 26 billion ESS business. I ran their electric vehicle charging market company across 3 markets. And there's one thing that's exactly the same in every small startup, fast-paced industry that you're in, is that we all box ourselves in. We think that we're already big, but we're not. If you step outside of this world, we're tiny. The daily Forex volume is greater than the annual volume within crypto, right? This is just a dot in the ocean. And success within this industry is really going to come when we use Web3 and we go beyond what we look at today. And you can see within this pyramid here, it'd be very easy to launch a decentralized trading platform like I'm doing and look at the top of that pyramid and say, yeah, I'd like to make $1 million a day in fees. Who wouldn't? But the real opportunity lies in the next 2 levels of the pyramid, offering a truly credible alternative to centralized trading, number one, and then being able to scale Web3 beyond crypto and really unlock the volume that sits outside of the space that we see in front of us right now. The real opportunity will come when a platform like ours means that you can trade on it and you don't even know that you're using the blockchain. That's when the blockchain is going to be really successful, and that's where the opportunity is going to come from for a platform like us. And just to hammer home that point, again, whenever you're in this early industries, you look at the big players, somebody like Binance, who's got around 70% market share now of global traded volume on the central exchange. It's easy for that to become almost a cage that we block ourselves into, and that becomes the target of where we need to go. But if we can nail these things, decentralization offers non-custody of funds, you can nail the user experience, people trust us, and then you can leverage the technology beyond crypto, and that's where we're going to break through this glass cage that we create for ourselves in what is actually a relatively small industry globally. So I've managed to nail this with 19 seconds to go because they gave me some pretty harsh words and said, look, you have to do this in 10 minutes. So I've managed to nail it. I don't know whether that buys us a couple of minutes for Q&A, or whether it doesn't. Am I getting a thumbs up or not? Yeah? We get questions? Okay, so we get one or two questions, but look, FoxiFy, just the pitch is we're a decentralized trading platform that offers you a CeFi experience with all of the trust of DeFi. We've got a stand here, we've got a fantastic team, come along and talk to us. You know, we're keen to talk to investors, liquidity providers, and also serious traders, and we're looking to partner with other players within the industry. So I'm being told we can take maximum 2 questions. If anyone would like to ask me a question, then now is the time. Got a question at the back here.
Okay, thank you for the wonderful presentation. There is, you did mention about decentralized exchanges. What policies can they make to protect retail investors from pump and dump schemes? Because there are exchanges that maybe there will be a token, they pump, and retailers will buy, then they dump on them. They manipulate the markets. So which policies can they implement to protect retail investors in the market?
Yeah, it's a good question. It's a slightly technical question because so most exchanges work on an order book model, which means there's buy and sell orders, and the depth of liquidity on each side of buy and sell. If it's very thin, basically, then the price will move very quickly, either up or down through the order book. And ultimately, this very fast movement, if there's any injection of liquidity, is what drives a pump and then the dump, right? It can move in both ways. A decentralized perps trading platform like our own actually uses a model, so I'm being attacked here, uses a model whereby we pull a price not from an order book, but from 8 different sources, which is then an aggregated price, which is called a time-weighted average price, a TWAP. So there's actually 0 slippage, and there's no order book model. You're trading against the liquidity pool, and the price is fixed. There's no slippage, and so you don't get the same. There isn't the same opportunity for manipulation, where by pumping in a lot of liquidity very quickly, you can then push the price in one direction, and then you can dump it very quickly back in the other direction as well. So fundamentally, in terms of trading, that's what's different on our platform and avoids that situation happening. If you want to come to the stand, there's lots of different things around how tokens are listed and how you arbitrage that you can do to mitigate against pump and dumps as well, but I'm going to get shot if I don't get off this stage in the next couple of minutes. Thank you. So we said one more question.
Hi. Good afternoon. I want to ask how transparent is the platform regarding the wallet, the trading wallets?
Sorry, I couldn't hear the question.
The transparency.
Sorry, could you rephrase the question?
How transparent is the platform regarding the wallets? Yes.
Yeah, well, it's very transparent, right? Everything on Web3 is is also sometimes a negative, but it's a very public ledger. Ultimately, our platform is an environment. The legal definition of our platform is actually a smart contract service, because we even on our options, we don't price options. The market prices them using the smart contracts to execute. And on perpetuals, there is an independently sourced price that's aggregated across 8 other independent sources. So for us, we have no interest in a trader winning or losing, actually. Whereas that's fundamentally different, actually, in most central exchanges. So we have no interest. It's completely transparent. We're not interested in you losing on our platform. There is no upside for us. We're interested in you wanting to stay on our platform and trade volume.
Thank you so much.
Thank you. So thank you very much for listening to me today. I hope some of you come over to this stand and we get to catch up over the next couple of days. Thank you.
Thank you very much.